Hello, everybody. Welcome to a fresh life insurance episode. This one's called Whole Life, as in whole life insurance. There are a lot of names for the same thing. Some of the names you may have heard of are pure life insurance or permanent life, barrel insurance for seniors, final expense policy, barrel insurance policy, traditional life insurance. These are all different names for the same thing, which is a whole life insurance policy. Now, if there are different tactics of calling these kind of policies different things and trying to present them differently, that's pure marketing. That's pure sales tactic. So just bear in mind, they're all whole life insurance. It is one of the most desirable kinds of life insurance for seniors. And some of the main reasons are that the benefits are locked for life. The costs are locked for life, so your price and your coverage will never change. The benefits built into the policy are locked. You have them forever. There's no point where they cut in half. There's no point where they go away. Let's say you are 63 years young and you get a whole life insurance policy. As long as it's not what's called a universal whole life insurance policy. This whole video, this whole article and blog, this is not about universal whole life. This is about traditional whole life, which is what 99 point something percent of people that are getting when they're getting whole life insurance. So you have these locked in benefits for your entire life. You're 63, you get a whole life insurance policy. What it costs today, it's going to cost in 30 years. The benefits that are built in the policy today, they'll be built in the policy forever until you pass away. And also these policies never expire, which is obviously a huge benefit that takes the gamble away from the policy. You know exactly what it's going to cost forever. You know exactly what your loved ones are going to receive forever. You know it's going to be the same. Now, these also build a cash value over time. But I want to emphasize that this is more of an emergency fund. So you don't want to just dip into it, pull that money out, and just say, well, hey, it's there, I might as well use it, because it will impact your loved ones. Let's say it's a $10,000 policy and you pull out $3,000. When you pass away, your loved ones will receive approximately $7,000. So it's less money that they're going to get. And technically, when you pull that money out, there's a very small interest loan that is created, and that's how it impacts your loved ones. So you have that there if you need it, but again, it's an emergency fund, so you want to just not touch it unless you absolutely need it, and then it's there for you if you do need it. Now, typically these whole life policies are going to be $5,000 to $40,000. If you are in exceptional health and you're under the age of 65, you might also have access to what's called a jumbo whole life insurance policy. These work exactly the same way as the other whole life insurance policies, but the prices are lower. Will be sent to you in the mail, and they'll process it right away while you're alive. You get that diagnosis because they know you're going to need the money. Now, if you do exercise this kind of a living benefit and they send you all of your face value, that does end the policy. They've paid it off. They've paid you. So you're done making payments, no obligations, no more payments, and they've sent you all that money. Now you can always go out and you can get reinsured. So you call your agent and you say, okay, cashed out that policy, got the full face value, got $40,000 of life insurance, now I want to get reinsured. You can do that. So bear that in mind. It's legal, it's ethical, you have the right to do that. There are other living benefits that may be on your policy, may not. Chronic riders, you get a chronic condition, those are a lot more common, such as COPD, neuropathy, those are conditions that are chronic. Also, there are some, not many, but there are some living life insurance companies that offer significant discounts on prescription medicines, dental work, eyewear, hearing aid batteries, 10 to 60%, and more often than times it's 30 to about 50% discounts on those things. Even legal fees. So these are living benefits that can be built into your policies. It doesn't have to just benefit your loved ones upon your death. It can also be things that save you money while you're alive. And sometimes the savings can outweigh the actual cost of the policy, so it can be very significant and it's worth looking into. Now, the last thing is that some of the benefits of whole life that some people may not be aware of, they're more lenient with their underwriting. What that means is, if you have medical conditions that you're concerned about, a lot of times you're going to be able to get a whole life policy because they are more flexible, they're more lenient with writing these policies. So it's good. It's good to be aware of that. Now, if you have severe medical conditions, there's something called a guaranteed life insurance policy. If your age is 50 to 80, they don't ask a single medical question. So it's guaranteed approval. The only downside of these guaranteed issue life insurance policies is no living benefits. And the other thing is it has what's called a 2-year waiting period. And it doesn't mean you have to wait 2 years to get the policy, and it doesn't mean that if you die within the first 2 years, your loved ones don't receive anything. What it means is that if you were to die in the first 2 years of starting the policy to when death occurs, that there's a reduced payout to your loved ones. So that's how guaranteed issue life insurance works. And they do that because they approve everybody. So if you have a terminal condition, doctor says you have 12 months or less to live, you can get one of these guaranteed issue life insurance policies. Now, the payout, a lot of you are probably wondering, well, Chad, what is the payout if you were to die within 2 years? None of us like to think that that's going to happen, but if it does, then your loved ones receive what you've paid into the policy plus 10%. So it's 110% return to your loved ones if you pass away in the first 2 years. You outlive that 2-year mark, it's 100% payout of the face value of the policy whenever death occurs. So I hope this has been helpful. Please let us know. Reach out to us. Email us at hello@protectwithinsurance.com if you want to see something else covered, if you want to hear me explain another aspect of life insurance. Otherwise, we look forward to hearing from you. Take care. Bye-bye.